So it's 27 degrees in my office right now. It's pretty horrible. Another thing that is horrible as well is actually missing the bottom or not being exposed in the market because you are listening to other people telling you, no, don't buy because it's going to go lower. The same people that are actually telling you that it was a super cycle, it was a lengthening cycle, don't take profit because we're going to go much higher. We're going to see a $180,000 Bitcoin. We're going to see a $10,000 Ethereum. Don't take profit. Never take profit. You should always be in the market. You should never take profit. You get the idea? We're going to talk about greed. So let's go into it. Very simple. The market will give you a fair price of what the market feels it's worth, right? It's your job to buy it whenever you feel like you want to. But by not being exposed, you're actually doing the fundamental failure of investing, which is not being in the market when you should be, right? Let's talk about the example on the screen here. This is BNB. Currently, it is trading, in my opinion, not at optimum levels, but it is a bit discounted. This is probably a good example to show you that maybe you can wait for this one, but there's many others out there that are literally on the floor, 96, 97% from all-time highs, that maybe you should be looking to add. Let's play a game called let's buy this asset as far away from all-time high as possible. That's a game you're playing. I've been talking about this a lot on my Patreon for months. People know that I bought in October, November, December, and then I finally finished my buying in January. Been sitting on my staking bags for a very long time. I did a video on it. I've been sitting for a while getting a zero-based cost on a lot of my assets, and most of them assets have not gone lower than those lows, from that FTX crash, basically. Some of them have gone and retested it a little bit, but I have gained so much from the free passive side through the staking. I've been able to chill, right? The game that I play, and I want you to write this down, look at the weekly levels and look at buying them, right? So, for example, with Binance, this area here might be one of your areas you may be looking at. $200 area is of interest, right? If it bounces off there, sweet. If not, well, you're probably going to buy lower, aren't you? The game that you're playing as well is having an obvious plan. If you have a plan to dollar cost average at the lows, which is fine, totally fine to do so, do it over a period of time, not through just randomly chucking all your eggs in one basket. Do it through time, right? And this is why diversification comes in, being able to just cherry pick little areas where they've made little drops, and you buy that one week, you buy that the next week, you do whatever, right? Regardless of how many assets you've got, the idea is not to have too few, but not too many. This is why I say 7 to 9 is usually a great number, because you're not going to get the added benefit of diversification by having 25 assets, because you can keep on top of it, right? Having too few and one fails, well, guess what? I've lost my money. You get the idea? Good. So with that in mind, let's look at a more obvious chart that looks even better value. Let's look at Cardano. Now, Cardano has done a much bigger drop. It has consolidated, and it is also has retested its previous low. Guess what? People are now getting greedy. People are now going, it's going to go lower, it's going to go lower. Yes, so what if it goes lower? But the reality is you want to be in the game before you actually get caught with FOMO and miss out. I've been there, right? I will hold my hands up and say in 2020, I wanted to buy Ethereum lower than $82. I was very much convinced that it was going to go a little bit lower. It didn't. I missed out. Luckily, I had a backup plan of investing my money into Zilliqa, which outperformed, obviously, Ethereum at the time in terms of multiple numbers due to its size. The reality is, and this is where people will go wrong, people get greedy at the bottoms more than the tops, because you're thinking about money. You're thinking about, oh, if I buy at this level, I can make more. Well, that's not the right attitude to have. You should always be, my average price is this. That's the game you're playing. You want to get that as far away from the previous all-time high. So if you bought Cardano up here and you've not dollar cost average, well, what are you doing? That's the game you're playing. You are trying to get a good position for the future. Now, again, we go back to it. The influencers, the idiots, the laughs are telling you not to take profit, not to take profit, even though, like, it's already done a monstrous move from, say, March 2020 to like these tops, for example, just a random example, huge move, nearly 100x. Woohoo, hello there. Or whatever it is, I don't even know. Can't even do maths these days. You know what I'm like. But the reality is, right, that is a big, massive greed sign to take profit. If they're telling you to keep going, keep in, buy, don't sell, then the same people are actually telling you not to buy down here. Do you see my point? You should always be, in some way, shape or form, have a bag just in case, because the biggest point of this entire operation is you don't know when it's going to top out and you don't know when it's going to, bottom out, right? This is why I do price predictions based off the Fibonacci of random levels, which could be of mathematical formula where people will identify levels of exit liquidity in terms of put and sell orders, right? That's all we got to go on. It's literally that. It's literally guesswork, weirdly, but to be in, to survive, and then to take profit is the game, right? So let me look at one more example, and I want to talk about it in terms of the dominance. BTC dominance, right? This is kind of what I've been looking at for a very long time, that 52, 53% level. There's a couple of influencers getting very excited about this, thinking it's going to go much higher. I don't think it will. Personally, I've said that before. I think we'll go up to that point and we may well melt from there eventually, giving us the next bull cycle. For it to drop that bad, we need Ethereum to literally half, literally be some doing. Not even in price, by the way, dominance. So that could be even worse in terms of half, in terms of pricing, depending on Bitcoin price. You've also got the counterfact of US stable coins, the dominance of that will go up as the market draws out of Bitcoin and draws out of altcoins and stuff like that. So obviously that's a big factor. So when we look at this, where can we go? Well, obviously up to here is not a bad shout. But the reality is here, the market's changed. Look at how strong this has been holding. Now, I think we're going to go higher here at some point eventually. When the altcoins kind of take off a little bit, this may well go up, and then we may well just continue going down, giving us a really nice alt season and a really nice bull cycle, right? But again, it's the same with the total market cap. We're looking at this area here. The market's still here, even though we've had a cataclysmic drop in most of altcoins over the course of the weekend. We're still here. Yet people are telling us that we should be, no, don't buy your altcoins because they could absolutely go into absolute despair. This chart is telling us that Bitcoin is pretty strong, because when you look at the total 3, we are here, right? Now, why are you not buying said levels, right? Said areas, said regions. Now, if you put a little cursor around where these wicks are here and just put that across there, why are you not buying? Why? What, in case we fall through here? Yeah, cool. If we fall. That's a part of the plan that you've got to have. Got your salary, split it up, put a percentage into the market every single month if you want to, over a period of a while. This is what I've been doing, right? I was dollar cost and averaging over that 4 or 5 month period through profits from 2021 into the assets I wanted, right? Why aren't you doing the same? Why aren't you doing it slowly? Why aren't you doing money where you can afford to lose, instead of going balls deep and crying whenever it goes lower? Because the reality is, said it before, we don't know where the bottom is. But would you rather try and find the bottom by putting dollar cost average orders in, by getting your average dollar cost price as low as possible at certain points on your assets, which is the game that you're playing? Doesn't make sense. But yeah, I talk about this a lot on my Patreon. My analysis is pretty much the same sort of thing in terms of looking at areas where you can improve. You should probably check it out. But another thing as well, Learning Crypto has a 14-day free trial on the premium. 14 days for free. And if you put the code in summer on the screen, you will get 50% off for 3 months. Not a bad little discount, really, considering.